What's up, gang? Just a quick one today. Wanted to talk about mortgage interest rates the rest of this year, but really going into next year too. Got an article pulled up here from CBS News. This one just came out about experts predicting what mortgage rates are going to do between now and all the way through 2024. So I want to take a look at this, move myself over, and just talk about this because it's interesting. Interest rate predictions are tough because here we are as I record this in September of 2023. Many experts predicted that interest rates would be much lower now than they are, between 6.5, low sixes. Many said already in the fives. That has not happened. Inflation hasn't eased as much as the Fed wants. They keep raising the Fed fund rate, or at least not lowering it, et cetera, et cetera. Bottom line, it has not happened nearly as fast as many had predicted. Hoped, I would say. I think a lot of it was wishful thinking. That can happen in predictions. We're all human. So I don't know, but this is a topic that comes up a lot about what's going to happen with interest rates. I can tell you what's going to happen when they do drop, but we've covered that in many other videos. So let's just look at what the experts say, and I'll give you my thoughts. So blah, 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 what to predict, a lot of SEO keywords. Okay. Selma Hepp, chief economist at CoreLogic, okay, big real estate data analysis company. Talking about people running out of their savings left over from the pandemic here. Pandemic, I don't know about you, but spending will begin to slow, which is what the government wants. That's what she's saying. And economy will begin to slow as well. Gas prices are rising. So at some point in the first or second quarter of 2024, so in the first half of next year, she expects the Fed to finally offer relief rather than keep raising rates. Finally, they'll cut rates and lower the cost of borrowing. Expect elevated mortgage rates to finish the year between 6.5% to 6.8%. I don't know if that means finishing this year or finishing next year. Either way, I could see it. Rates have been sticky. If they stay within the sixes all the way through next year, that would not surprise me. Mike Hardy, Churchill Mortgage managing partner, he sees mortgage rates heading down over the next 6 to 12 months. Some volatility that will definitely occur. I think that's a given. He thinks 30-year rates will be in the ballpark of 5.25% a year from now. That would be insanely good. That would be tremendous. That would really... That would probably mean we had some economic turmoil in the broader economy, but that would spur a lot more buyer activity. That's what's going to happen when rates go into the fives. A lot more buyers are going to come out because it's going to help affordability. We have an affordability challenge right now in real estate. It would also spark another mini wave of refinances, a little mini refi boom, kind of what happened in 2020, 2021 when rates were so crazy low. Mortgage loan officers were just doing bank as far as business goes because of all these refis. That is dried up. I have a mortgage right now on a house that's 6.5%. If it went down to 5.25 or even 5.5 or even 5.75, I'm in. I'm refining. It makes too much sense. So Jack McDowell. So Mike Hardy is a little more optimistic about what's going to happen than our friend Selma at the top. Jack McDowell, co-founder at Palisades Group, whatever that is. I trust asset management firm. Great. Dispersion of outcomes is wide, he points out, which is really the only reasonable way to start this sentence. His base case assumes mortgage rates will be tighter by 25 to 50 basis points. So it's 0.25% by the end of the first quarter 2024. So a few months into 2024, they're thinking the fixed rate mortgage around 7%. So I'm seeing a lot of that right now. Yeah, I guess 7.25 up to 7.5 if it's really bad. So he thinks they'll ease a little bit. What he thinks will happen in the second half of 2024, who knows? This guy, Ralph, not going to try to pronounce the last name, founder of Home Qualified. He believes we're back to some normal buying and selling and refinancing cycles. 30-year and 15-year fixed, he thinks will average around 7 to 6.375 during the first quarter of 2024. That seems reasonable to me as well. It seems unlikely that they'll keep going up at this point, especially since inflation has slowed so much, not as much as Jerome Powell wants, but hey, what are you going to do? But so they should ease at some point going into this winter and early 2024. That seems reasonable to me. That's a pretty wide range of outcomes, okay? 6 and 3.75 to all the way to 7%. We'll see what happens. Craig Martin, JD Power Managing Director, barring any extreme market shocks, we expect interest rates to remain at similar levels to where they are for the next 6 to 12 months. JD Power is a company that rates cars and trucks. I don't know what he's weighing in here for. I'm kidding. I'm sure they have great data and lots to do with the housing market. I just don't know. He thinks nothing's going to happen. He doesn't think they're going to change at all. Guys, the best thing is, the best way to put it is the dispersion of outcomes is wide. I know that's not what anyone wants to hear. Everybody wants to look into the crystal ball. We are between, probably 7.2 and 7.4 for most people right now, at least what I'm seeing on a 30-year fixed. That's going to ease at some point. It has eased and gone back up. It's been volatile. We've seen volatility ping-ponging back and forth. What's going to happen over the next year? It would seem unlikely they're in the 4s by this time next year. Even to be in the 5s seems unlikely to me unless there's a big, broader change in the economy, which could happen, which the Fed is willing to happen, but somewhere between 6.25 and 6.75 this time next year would make sense to me. Again, I'm not an expert any more than any of these guys, probably less than most of them, except the guy who rates cars. Kidding. JD Power is a great company. So we'll see. We can expect rates probably, because inflation has gotten under control, not to rise too much anymore. We can expect volatility, and they're going to come back down to between that 5 and 6.5 baseline at some point. If rates get into the 5s and you have an interest rate that's 6.5 or above, it's going to be time to talk about a refinance, because it's going to make financial sense and it's actually super easy for you to do. And if you're worried, what if rates drop again? You can refinance again. It doesn't cost that much. It costs a few grand in closing costs that most of the time they can roll into the loan. I have people ask me all the time, Sam, you say just refinance. Is it actually that easy? Short answer, yes. It's extremely easy. It's nothing like getting a loan to purchase a home. So those are options that are on the table. What do you think? Weigh in the comments. Let me know. By the way, for those of you who don't know, many of you probably do, but my aim is to be your go-to real estate professional in the Denver metro and the wider state of Colorado. Please let me know if I can help you with anything. Even if it's just to have the conversation, that is my jam. Love you. See you guys soon.